Hi there. For those of you who don't know me, my name is Jim Moore, and I help small business owners make more money from their business and enjoy more free time away from their business so that they can truly live life on their terms. Today, I want to talk to you about cash flow. I want to talk to you about why cash flow is absolutely critical to all businesses. So let's go straight to the first slide.
Hi there. Today I want to share some thoughts with you on the subject of cash flow. There's an old saying that says, a sale is not a sale until the money is in the bank. Basically, what that old saying is telling us is that you can have a profitable company but still hit the brick wall of a cash flow crunch. If your sales are increasing but the money isn't flowing in from your customers, even though you're profitable, you're heading towards a cash flow crunch. So sometimes expansion can actually be the very cause of a cash flow crunch. In a small business, winning the cash flow battle is a constant battle. Money comes in from sales, hopefully quickly enough. Then that money has to go out to pay wages, to pay suppliers, and to pay tax payments. What's left is what the owner can take home. So cash flow is absolutely critical to every small business. And here are some cash flow questions that I believe you need to know the answers to. How many trade debtor days did you hold at the end of last month and at the end of the same month last year? We're comparing to the same month last year to take seasonality out of the picture. Think about, for example, a resort hotel. We're going to see sales much higher in the summer months or perhaps at Christmas than we will on other months of the year. So it's good to compare a particular month against the same month last year so that we're taking the seasonality factor out of the picture. There's a formula for trade debtor days, which is the trade debtors divided by sales times 365. The higher the number of debtor days, the greater the amount of your cash that is tied up in financing unpaid sales invoices. It's absolutely critical to be as much on top of trade debtor days as you possibly can. And being on top of trade debtor days actually starts with getting your sales invoices out to customers fast. You also need to know how many trade creditor days you held at the end of last month and at the end of the same month last year. Again, we want to keep track of how fast we're paying our trade creditors, our suppliers. If the number of trade creditor days is rising, that may well be an early indicator of pressure in cash flow, i.e. that you're slowing down the payment to your suppliers quite simply because cash is very tight in your business. Early warning signs of potential cash flow issues are obviously good. The more warning we've got, the better, so that we can take some remedial action while we've still got time on our side. The next question that I would want you to ask is, what was the value of bank balances at the end of last month and at the end of the same month last year? That one's pretty straightforward. Quite simply, we want to see how much cash we've got in the bank at this point compared to the same point last year. Obviously, if the bank balances are falling, it's a pretty good indication that our cash flow is getting tighter because we've taken seasonality out of the picture by looking at the same month last year. It's also good to know what months are your tightest months in the year for cash flow. In the UK, that might well be the month where both the quarterly VAT payments and the annual corporation tax bills fall in the same month. It's good to be aware of these things. Quite simply, be prepared, plan ahead so that you don't get hit by a cash flow crunch. I also want you to know how much you hold in net current assets at the end of the month and at the end of the same month last year. Net current assets are your current assets minus your current liabilities. We're looking at short-term business liquidity, i.e. how much have we got in assets that we can use to pay off the liabilities that are going to fall due in the very near future. What would be included under current assets? Well, we would be talking about the bank balances, we would be talking about trade debtors and stock that is there to be turned into products and sales in the foreseeable future. Current liabilities, we're talking about money that's due to suppliers, we're talking about money that's due to be paid in short term to the government. Those are principally the sort of things that we would be looking at. So basically what we're thinking about is current assets, assets which can be turned into cash fairly quickly, and how they relate to current liabilities, liabilities that are going to have to be paid in the foreseeable future. The current asset ratio is an excellent measure of this liquidity. I always like to see a current ratio that's in excess of 1, because if it's any less than that, it means that in the near future you've got to pay out more money than you can reasonably anticipate coming into your business. Clearly that's a negative cash flow situation, and one that we want to avoid wherever possible. So in conclusion, cash flow is probably the most critical area of all for your consistent attention as a business owner throughout the financial year. Profitability is clearly very, very crucial in any business, but as I mentioned earlier on, you can have a profitable business that still hits a cash flow crunch. So please keep your attention on the cash flow in your business. I'll mention to you Xero cloud accounting software. It's, in my view, excellent to help small business owners stay on top of their cash flow really on a day-to-day basis. And I've shown you on the slide the website address for Xero, and I strongly recommend you go there, have a look at what Xero can do for you. For a small monthly subscription to Xero, it's really very worthwhile. Well, that brings us to the end of this short video. I hope it's given you some food for thought on the area of cash flow and its critical importance in your business. If you have any questions at all in relation to either improving your profitability or cash flow in your business, then please email me on jim@jwmbusinessadvice-accountancy.com. I'll be more than happy to personally reply to your questions.